Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 28th. It's Thursday, and we got a couple of significant economic numbers coming out, including advanced GDP and the jobless claims. And we had some crazy action yesterday. We may be entering into a more critical time in the markets here. So let's come to the charts to explain why. So, well, let's start with the E-mini, I guess. E-mini, really crappy trade most of the day. My E-mini trades on Sim did not do very well at all. And then into the close of the day, just total puke. Ugh. Just absolutely whoosh. So now over in the treasuries, there was a lot more action. And oh my gosh. So the Bank of Canada came out and was more hawkish than expected. I don't think I played that one very well. I was like, well, we're going to fade this. Like, the Bank of Canada never means anything, and I don't see anything new in there. But apparently, it very much exceeded the traders' expectations. And I don't think that I looked into what was going on at the time nearly as deep as I should have. But there was a really big exhaustion move on the way down. And then the rest of the day, we had this move up. Now, you can really see it in the 30 and the 10, like, just went way higher. But even the 5-year eventually broke its highs. And that was where the auction was. And I was taking along in the auction. So I think I kind of got lucky because I lost some money on the Bank of Canada move. But then I reversed. Eventually, I caught my winner. And my winner was way bigger than all of my losers. So I did well yesterday. I think we've made some good strides this week. Although I think there was a lot of luck involved in that particular one. Anyways, and we have a 7-year auction today, so kind of depends on what the news is going to be, but I think that we may continue to see auction demand, but we'll see. Oil taking a little bit of a beating yesterday and overnight, but it's only back to 80, so no big deal. Natural gas still kind of ranging after the big run up over the weekend. Silver and gold a little bit higher. So recovering some of their losses there, that's looking a little bit better, particularly in gold. And then copper also taking a beating yesterday. Concerns of global growth coming through. I mean, that's kind of what I think the charts are showing us here. The dollar still in the upper 93 range. We'll see that things, got a little hairy during after the Bank of Canada thing, but then kind of all evened up. And Bitcoin taking a little bit of a tumble yesterday. And once again, it's like when Bitcoin sells, all of the exchanges are down. What the heck? Take it, go out a little bit. It's I don't know. It sounds like most of the really crypto focused people aren't too concerned yet, but you got about a month. You got to get about a month before the cryptocurrency market is going to have some significant selling coming in. So we'll see what happens. Okay, so let's come back over here. Oh yes. Now there's also some things that we can't see on the charts today that were important, and a big one is that in Australia, the Australian Central Bank declined to put any bids in for its 2-year. So basically, yield curve control in Australia got murdered last night, and the note, their interest rate rose 50 basis points. That is nuts. 50 basis points is crazy move. Okay. That'll create a big VAR shock, like because of that degree of a move, that like everybody has to adjust their value at risk models to because basically it says the amount that you could potentially lose on the worst kind of move is more now, so your more margin is required. So that's probably going to affect us all, and you can see here, there's a decent amount of volume has been going through in the Treasury market since we opened. We've got about 6 minutes to the news. Let's go through the news that we've got coming up here. Oh, did Gary Norton make a video? Oh, that's something else. Oh, they put my interview on Financial Juice. Thank you, Amar. That's very good. Okay, anyways, let me close these little notifications. Okay, so we get U.S. initial jobless claims looking for a reading of 287,000 versus a previous reading of 290. So we do expect it to be about the same that it was. If those jobless claims were less than expected, that could be pretty positive, even if it was a small amount. Okay. Let's see here. We got all these export numbers, PCE prices. Oh, GDP. GDP quarter over quarter advance, expected reading 2.6%. We also have, I did not know, ECB press conference today. Okay, so that's going to, that makes our job difficult, right? ECB press conference makes our job quite difficult. Why do I always miss that one? When the central bankers are on TV, that's a difficult trade. I tend not to mess with that one. Oh, is it that time? Let's update. I gotta update some stuff. Hold on. You're just gonna see me. You're just gonna see me. Yep. So it warns 1, 2, 3 days ahead. Somebody was messaging me about the licenses. So for the people that subscribe to the licenses, I have to update it every month, and apparently they get the message like 3 days ahead. So maybe I should just update my stuff to work on a different system, because maybe I wonder if I can just tie into the YouTube API directly. like a little window would show up and ask you to log into YouTube, and then as long as you're subscribed, it would give you access. I think that would be way better. Then I wouldn't have to do anything. I think it would make a little bit more sense to people. Okay, here comes our numbers. Ooh, they pulled. Oh yeah, look at that, man. The 10-year Treasury. I think I might trade taking some one tickers in here. Okay, lower than forecast on the GDP. Jobless claims are way better than expected, though. Oh, it did fill me. I was like, oh, did they went the wrong way there? No, I actually got filled. By the way, good morning, Keller, TLA, Uzi. So interesting. So the continued jobless claims was pretty good. Was the initial jobless claims, they were expecting 287, they got 281. Okay, so that's good. But then the U.S. GDP was 2% versus 6%. Yep, GDP press ECB press conference today. Shall we pull that up? Will it show up when yeah, it does show up on my front page. They haven't started yet, so we just chill here. Oh, we're fine. Okay. I'm already hearing stuff from my new squawk coming over, even though, oh, this is the old one. Hold on. I'm wrong. There we go. Okay, so we're gonna have to turn off financial juice here for a bit. Pull the guard over here.
Is outpacing
There we go.
Supply. We foresee inflation rising further in the near term, but then declining in the course of next year. Market interest rates have increased since our last meeting in early September. However, overall financing conditions remain currently favorable for firms, households, and the public sector. Favorable financing conditions are essential for the economy to continue its recovery and to counter the negative impact of the pandemic.
It's Suncrisp lady.
We continue to judge that favorable financing conditions can be maintained with a moderately lower pace of net asset purchases under the Pandemic Emergency Purchase Program than in the second and third quarters of this year. We also confirmed our other measures, namely the level of the key ECB interest rates, our forward guidance on their likely future evolution, Our purchases under the asset purchase program,
Seeing that little bell icon with two
policies and
notifications is
our
driving me crazy.
financing
There we go.
operations, as detailed in the press release that was published at 1:45 today. We stand ready to adjust all of our instruments as appropriate to ensure that inflation stabilizes at our 2% target over the medium term. I will now outline in more detail how we see the economy and inflation developing, and will then talk about our assessment of financial monetary conditions. Looking at the economic activity, the economy continued to grow strongly in the third quarter, even though momentum moderated to some extent. We still expect output to exceed its pre-pandemic level by the end of this year. The grip of the pandemic on the economy has visibly weakened, with restrictions being lifted as a result of successful health measures and large numbers of people now vaccinated. This is supporting consumer spending, especially on entertainment, dining, travel, and transportation. But higher energy prices may reduce purchasing power in the months to come. The recovery in domestic and global demand is also supporting production and business investment. That said, shortages of materials, equipment, and labor are holding back the manufacturing sector. Delivery times have lengthened considerably, and transport costs and energy prices have surged. These constraints are clouding the outlook for the coming quarters. The labor market continues to improve. Unemployment has fallen, and the number of people in job retention schemes is down significantly from the peak last year. This supports the prospect of higher incomes and increased spending. But both the number of people in the labor force and the hours worked in the economy remain below their pre-pandemic levels. To sustain the recovery,
I don't want to take a live trade here while she's speaking, but they kind of look like they want to go for higher rates here.
This support will also help the economy adjust to the structural changes that are underway. An effective implementation of the Next Generation EU program and the Fit for 55 package will contribute to a stronger, greener, and more even recovery across euro area countries. Let's look at inflation. Inflation increased to 3.4% in September. We expect it to rise further this year. But while the current phase of higher inflation will last longer than originally expected, we expect inflation to decline in the course of next year. The upswing in inflation largely reflects a combination of three factors. First, energy prices, especially for oil, gas, and electricity, have risen sharply. In September, energy inflation accounted for about half of overall inflation. Second, prices are also
Sure enough, they're going for lows. Though you notice that they're not putting much liquidity on the DOM right now.
These dynamics are
So I'm not the only one that doesn't want to be messing with it.
Services, as well as the prices of goods affected most strongly by supply shortages. And third and finally, base effects related to the end of the VAT cut in Germany are still contributing to higher inflation. We expect the influence of all three factors to ease in the course of 2022 or to fall out of the year-on-year inflation calculation. As the recovery continues, the gradual return of the economy to full capacity will underpin a rise in wages over time. Market and survey-based measures of longer-term inflation expectations have moved closer to 2%. These factors will support underlying inflation and the return of inflation to our target over the medium term. The recovery continues
It's hugging
to
that first
depend
5-minute range.
on the course of
Yeah.
the pandemic and further progress with vaccination. We see the
So let's
risks
look
to
at
the
this a little
economic
bit. If ZB
as
was to
broadly
try and, oh man,
balanced.
okay, yeah, because the ZB value area is all the way down to 159.28. So if they did try and do a bear move today, they could go some distance.
And higher energy prices last longer, this could slow down the recovery.
This is bad environment for one tickers, but I might still try it.
Bottlenecks feed through
Look at
into
that.
higher than anticipated wage
It
rises.
just doesn't take much for them to
The
trade
economy
through.
returns more quickly to full capacity, price pressures could become stronger. However, economic activity could outperform our expectations if consumers become more confident and save less than currently expected. Let's look at the financial and monetary conditions. Growth and medium-term inflation dynamics still depend on favorable financing conditions for all sectors of the economy. Market interest rates have increased. Nevertheless, financing conditions for the economy remain favorable, not least because bank lending rates for firms and households remain at historically low levels. While there was a pickup in September, lending to firms remains moderate. This continues to reflect the fact that firms generally need less external funding since these have high cash holdings and are increasingly retaining their earnings. Lending to households remains strong, driven by demand for mortgages. Our most recent bank lending survey shows that credit conditions for firms stabilized and were supported for the first time since 2018 by a reduction in banks' risk perceptions. By contrast, banks are taking a slightly more cautious approach to housing loans and have tightened their lending standards for these loans accordingly. Bank balance sheets continue to be supported by favorable funding conditions and remain solid. Let me conclude. The euro area economy continues to recover strongly, although at a more moderate pace. Rising energy prices, the recovery in demand and supply bottlenecks
Now they're breaking
are currently
through.
pushing up inflation. Now, while inflation will take longer to decline than previously expected,
Now, this is also a little bit fraught for me on the Treasury side because
continue to
I
foresee
get,
inflation in the medium term
I think that there's just some
remaining
reasons
below
for
our
there to
2%
be
targets,
rising rates like hawkishness and stuff like that.
including
But we also
our
have a
revised
Treasury
forward
auction today.
guidance
So I'm
on the
a little
key
worried that
interest
we
rates
get the same kind of a
are
reversal like we had
to
yesterday,
helping the economy shift
especially in the
to
10-year
sustained
since it's a
recovery
7-year auction.
and ultimately to bringing inflation over the medium term to our target. We are now ready to take your questions. Thank you.
Thank you, President Lagarde. And the first question today goes to Annette Weisbach of CNBC. Annette, the floor is yours, please.
Wow, so many people on the Zoom conference that don't have video cameras.
President Lagarde, thank you very much for taking my questions. Can you hear me?
Yes.
Yes, perfectly. I was wondering, because the market, everybody was anticipating that this meeting was all about inflation. So what have you been discussing and what was on top of your agenda? And was there at least a slight different assessment to the nature of inflation, given that inflation is at a 13-year high now for the Eurozone? My second question would be on the market's expectation about the rate hike. Your chief economist was saying that the market has not fully absorbed your new forward guidance. Perhaps you can tell us more about it and why the market is wrong to expect a rate hike already by next year. Thank you very much.
Well, thank you very much. Actually, we talked about inflation. That has been a topic that has occupied a lot of our time, a lot of our debates, and we went, I think, in depth into analyzing the factors that are driving inflation. And we looked at, obviously, what is happening now, which is clearly of concern, particularly to citizens of Europe. But we also looked at the medium-term outlook that we have. And, I think I would summarize those factors driving inflation as we see it at the moment in two key categories. One is related to pandemic and recovery, and the other one is related to energy. If you look at the one that is related to recovery and the post-pandemic period, we are seeing shortages. We're seeing shortages in equipment, we're seeing shortages in labor, and that has to do with the fact that the rebound of demand, the decompressed demand, if you will, is not exactly connected with the supply. And we have this supply-demand disconnection. The second, as I said, is energy. And on that front, we have drivers of the energy prices that have to do with the recovery, that have to do with the demand, but also other factors having to do with inventory, with the wind, with maintenance in Norway, with demand in China, with the supply by Russia, all elements that actually are contributing
Still going there.
that we are facing.
The liquidity has solidified, at least on the offer side.
That are causing inflation as we discussed it today and yesterday afternoon. Now, there is a third category, which is very much related to the base effects. And I would put first and foremost, obviously, the German VAT, which is going to continue to impact our inflation numbers until the end of this year, but which will disappear as of January the 1st. So that's one category, base effects, that will fade as of the beginning of the year. We also believe that the other two buckets that I have just discussed with you, that is recovery-related and pandemic consequences on the one hand, energy prices.
Looking at some sales programs now, FNAX. You think that a large sell meta order is coming through?
2022.
Well, in the 10-year, the cumulative delta has changed quite significantly, and we've gotten about, let's see here, 18 to 102.
And we are confident that this analysis
So about 15,000 contracts have sold here.
is actually correct.
It's a very low liquidity, though. This kind of makes you wonder.
It will take a little longer than what we had expected, and the bottlenecks will
like the issue with that is, I think it should fall, but it won't take very much for it to bounce.
I believe that it's in the course of 22 that we will see a decline in at least a stabilization, if not a decline of energy prices. So that was, predominantly what we discussed with members of the Governing Council this morning and yesterday. We also obviously looked at the financial conditions that prevail at the moment in order to arrive at our monetary
As an equities investor, what should I be looking for in the Treasury's auction? Well, that's a good question. So I think that when you're trading equities, generally speaking, you shouldn't see too strong of a correlation between the two of them. But it is going to depend very heavily on what stock you're talking about, right? Like one of the stocks that I own, Goldman Sachs, what the interest rate is matters a lot, right? And interest rates lowering because of the auction will tend to hurt Goldman Sachs because they want higher interest rates, right? They'll make more money with higher interest rates and a steeper yield curve.
Anticipation and our analysis is actually
Right.
correct.
Thank you.
So also, you know, all of these banks and everything, they need to own a certain amount of treasuries, and apparently they have a hard time getting them all these days. So
Hi, good afternoon, and thanks for taking my questions. President Lagarde, you and many of your colleagues have pushed back against the idea that you need to tighten policy in response to the inflation spike that we're seeing, but many of your global counterparts have in fact started doing so. So could you explain in what ways the Eurozone's underlying inflation dynamics are fundamentally different to those that we see in other advanced economies? Or do you think that other central banks might be overreacting to the rise in prices? And secondly, on the PEP pace, you decided in September to slow your PEP purchases to a moderately slower pace in the fourth quarter, but we haven't actually seen that in any of the weekly data so far this month. So does this have to do with, you know, countering the effects of...
by the way, I haven't seen any big orders in the ES yet today.
Sure. Well, let me start with the latter part of your question, which has to do with the our PEP purchases and the decision that we made and that we reiterated this morning at our monetary policy meeting to slow the pace of purchase as compared with the second and third quarter of 2021. And this has in fact been the case. This is what happened in September, this is what was decided for October, and this is the view that we have taken this morning as well. So slow down in the pace of purchases, which is, as I said last time around, this is not tapering, this is calibrating appropriately on the basis of the commitment that we made back in December last year to look at a combination of the financing conditions to determine that they are favorable and a look at what the inflation outlook is. And we came to the conclusion yet again this morning that on the basis of both financing conditions that are favorable, particularly at the level of corporates and households, where they are at historically, interest rates are at historically low level, and there seem to be plenty of supply of lending available. And that when we look at the inflation outlook, we concluded that the same the same assessment was appropriate.
Okay, so they're doing a little bit of stuff at 24 there. There's 18,000 contracts traded at 24?
Ask me to compare with other central banks. First of all, I think that comparisons for good reason are odious, simply because we are not talking about the same economies. The outlook is different. The level of inflation that they have is different. Some of them are either at or above target already, including in the inflation outlook, and that fully justifies that they adopt different approaches. Some of those central banks are in commodity producers and exporters economies, and that also justifies particular approaches. So clearly, the euro area is a very large market economy. It is not a small open market economy. It has to decide on the basis of data what the monetary policy should be in order to deliver on our mandate, which is price stability. And I can assure you that we are fully committed to our 2% inflation in the medium term. That is our target. We have affirmed it in July. We are absolutely determined to deliver on that target, but we have to do that on the basis of data. We have to be patient. We have to be persistent as to our policy going forward, and that is particularly so at the effective lower bound where we are, as we have indicated in our strategy review recently.
So let's see here. How much did that change the rate?
Thank you. And now the next question goes to Klaus Rainer Jakisch of ARD Television. Klaus Rainer.
So maybe 30? 30 ticks, maybe?
Mr. President, thank you very much for taking
40, 50, 60, 70.
The first one actually is not mine, but one we are receiving a lot by viewers, listeners, and readers.
3 basis point rise
I
there.
would like to summarize it like this. They would like to know what are the preconditions to be necessary for the ECB to return to a kind of normality, then meaning by this that...
Nassim Nicholas Taleb tells CNBC that cryptocurrencies don't hedge anything. You go, Nassim. He's totally right.
The question relates to some research. the Center for Economic Research in Mannheim, Germany, has done recently, and they.
This is how he went on CNBC with a mask. That's hilarious.
Statements and speeches.
You're trying to short here,
ECB,
Ace?
governing council members. And
By the way, you got your 2 yesterday, right? Because I had trouble.
Between fiscal
I had trouble in e-minis. I had one that kind of ran, but, you know, it eventually stopped out. I never really got to work yesterday.
There is a certain kind of focus on fiscal policy by some governing council members, and that is a suggestion, influence the decision-making process. How do you feel about these findings? Thank you very much.
Well, thank you so much. Let me clarify, first of all, that the European Central Bank is independent and is bound by the Treaty of Europe, to put it simply, which gives us one mission, and that is price stability. So, as I said, we are committed to deliver the price stability that forms our mission under the European treaties. This is our commitment, and we have defined it very specifically by indicating that price stability, for our purposes, will be defined as this 2% symmetric target in the medium term. So that is what will guide us in delivering our monetary policy as the quarters and the years go by. Second point, as you know, we are still operating on the basis of the Pandemic Emergency Purchase Program, and that was fully justified given the totally exceptional circumstances and very severe circumstances that affected the whole world, but particularly the euro area, which we are concerned about. This Pandemic Emergency Purchase Program, PEP, is...
Oh, your whole house blacked out?
In my view,
dude.
to end at the end.
Well, that's why you have the UPS, Ace.
Return to what you would
I could probably make it 20 minutes, but I would probably exit the trade as soon as it happened, right? Unless I was really confident in it.
That were used in the past and that have been used to good effect. And over the course of the development of the financial crisis in particular, of the European sovereign debt crisis, new territories had to be explored.
So I take it you got short at like 26?
That was assigned to the ECB.
You don't have that. What?
The ECB had to go into...
Oh, so you're just short and... oh man, and you just had to like restart your computer, huh?
One of these programs, PEP,
that'll teach you. 26 to 16, that's a good trade. It's 300. That's 3 such and such bucks.
Which was the term that was envisaged in the first place. And as far as the rest is concerned, we are going to be bound by our forward guidance, which we have spelt out in 3 dimensions, if you will, in order to give some guidance as to when we will lift interest rates. And those 3 elements, I would like to just mention them yet again, have to do with inflation, as you could imagine. And the first one is that inflation reaches 2%, our target, well ahead of the end of our projection horizon. We have more certainty about our forecast, we have more elements to assess that. Second condition, that this inflation remains at those levels, 2%, durably for the rest of the projection horizon, which is roughly 3 years. And third, that there is sufficiently advanced realized progress in underlying inflation for headline inflation to stabilize at 2% over the medium term. So I think the conditions for this interest lift off, which is of interest to your audience, are pretty well spelt out in this forward guidance, which clearly under
you have 2. Yeah, you should have 2. One for the computer, one for the router.
And certainly not in the near future.
I'm quite happy with my UPS purchase.
Goes to Tonia Mastrobuoni of La Repubblica. Tonia, over to you, please.
Yes, hello. Madame Lagarde, can you hear me?
Yes, very well.
Thank you very much. So you mentioned before the shortages in materials and the supply chains bottlenecks that are clouding the outlook in the next months on inflation and on the economy. How long do you think they will last? Because also Germany has yesterday had to correct very heavily the outlook for the economy and the inflation in the next months, but there are many question marks still remaining about how long could it last. So I wanted to know how long would you think in your outlooks that they could last? And second question, in the worst case scenario, so if inflation wouldn't be temporarily because these effects could last, do you see any risk of stagflation? Thank you.
Well, thank you so much. On your first question, the supply bottlenecks. First of all, it will fade. I mean, the economic actors are such that they are going to reconnect supply and demand. For those microchips that we don't have at the moment, factories are being built. For those vessels that are not available, there are some producing countries that are working on new vessels. For this shipping to be better organized and hauling to be better sorted out in ports, this is going to gradually be settled and sorted out. So it will fade away. Second, it will most likely take a little longer than what we had anticipated and what most had anticipated.
Uzi Ace goes and finds one for him. Is that the one that you have?
Survey. So we make phone calls to various large accounts, medium-sized accounts.
Oh yeah, that's what I have for the router.
You see, when will you get
That's I think that's the exact one that I have for the router.
And you know, this is telling us that it will be settled and it will be sorted out in the course of 22, but not in the first quarter of 22. And some of them have been saying it will take the whole year to properly settled. It will be gradual. Certain deliveries will come about earlier, but overall, it will take.
I've been talking to Amar and PM, trying to understand how their tick strike tool works. Yeah, he's like, "Oh, I'm listening right now." And I'm like, "Well, there's nothing really here. We're just listening to the ECB press conference." I'm not a fan of the press conferences, man. It's like impossible to trade during them. Like I would love to have been long interest rates and made $30 here, but I just can't do it when she's talking, man. So you never know what's going to happen. The liquidity is just not there.
Is going to channel back to markets at some stage, and then there will.
So did you hear that little click there, Amar? That's my click.
So we're really talking about the passing of time and how long that will be. Difficult to say, but certainly longer than what we had expected. And if we are to believe the corporate accounts and those that are in charge of logistics, of supply, of purchases, they're saying that in the course of 22, it will be resolved. So that's what
you had to buy a new battery for one of them.
The supply shortages.
For the main computer, I have one that like has a little display on the front of it. I quite like it.
We are not seeing stagnation to begin with.
No, I think keep listening. You'll hear it. It's like it almost sounds like an audio glitch. It's just a really short click.
We have a strong recovery. The momentum is abating.
Here, actually, I'll give you the audio file.
Shocks that we have just discussed because of the supply.
I made it. It's my sound.
Because of the price of energies going up, but we are not seeing any kind of stagnation on our horizon. And as far as inflation is concerned, I think we have just discussed it. We see it rising, and it will continue to rise, by the way, until the end of this year, we believe. And it will begin declining as of the beginning of 22, simply because of the German VAT getting out of the statistics. And then gradually over the course of 22, as the bottlenecks are resolved and as energy prices will be reduced as well.
You're big overnight on your ship, Kel?
That's what you have seen. We have seen over the course of all the historical abrupt energy price rise. It doesn't rise forever. It stabilizes and eventually it settles a little lower.
Thank you. And the next question goes to Francesco Canepa of Reuters. Francesco, the floor is yours.
Oh, Shiba Inu passed Dogecoin last night. Wow.
Yeah. Hi, guys. So the first question is about PEP. You told us that you expect to end it in March. Do you also see a chance that you may not use the envelope in full? I mean, how do you rate the probability of that? And the second question is about your ethics review. The Fed has tightened the rules governing how its policymakers invest their own money. I know you're doing your own review right now. So how do you plan to change those rules also in the Fed in the light of the Fed's decision? Thank you.
Well, thank you very much. As I said, at this point in time, I expect PEP to end at the end of March. Whether we will use the full envelope or not is to be seen and will be a factor of
1,200%.
financing conditions.
So I had a guy at work, he told me that he was in Shiba. Like, I think he said he put a few thousand into it. So I think that he put like 1,000 or 2,000 in there. He must be up. Man, he must have made like 10K on it.
We have not discussed that at all, neither this morning nor yesterday.
Question though is, how long can that last?
Rules. As you know, we have a code of conduct. We have ethics.
So they all want Robinhood to list it, right? That's why they're buying it.
Publish the holdings that board members have, that governing council members have, and so on and so forth. There have been quite a few pieces already committed as to who manages what, who owns what. And our ethics committee and the ethics officer are currently reviewing, revisiting those rules to make sure that everything is plain, transparent.
Well, they are reversing a little bit in the Treasury.
Without any conflict. And those rules be adhered to and respected by all members concerned.
Thank you. Next question is for Martin Arnold of the Financial Times. Martin, it's your turn.
Have any thoughts on my note from yesterday regarding the fact that the ES was nowhere relative to the major cap stocks? Yeah, so I actually tried looking through that and trying to figure out which stocks seem to be most what is the word, most influential on the move yesterday, and I couldn't really figure it out. Like, it was a little, and it looked like that there was some big divergences, right? Like some of these really big cap stocks didn't really went the opposite way to the rest of the index, and
assess is the validity of,
and then they all just kind of fell at the end of the day, which was also kind of weird.
Analysis, once we've determined that it was correct.
What I can say is, if we come back to this chart over here, right?
And what I can
we look at our ES chart, right? NQ looks like NQ got hit harder.
Time expected by markets of liftoff.
So that to me looks more like a value rotation that people were getting out of growth stocks and going into value stocks.
As to why we believe that inflation will continue to rise until the end of this year, will decline over the course of 2022.
So on the shitcoin thing, did you hear that there was somebody that had an 8K wallet?
That's the analysis.
That, like, when they created the wallet, they put 8K into it, and it's worth like $6 billion now.
That I have opened the discussion with, whether it's.
Did you see that one?
Whether it's energy.
How's that guy gonna get out?
I think that all those
if he transfers any of that to an exchange, everybody's gonna be like, uh-oh.
But they will fade.
He's gonna have to do super tiny amounts.
What I also tell you is that we will be very attentive to wages evolution. That will, of course, be critically important for the purpose of.
That is also it's crazy, right?
But certainly on the basis of the data that we have today,
it kind of says that I saw this. I think it was a guy from Bloomberg on TikTok, and he was saying, like, he was talking about the London whale, and he was saying the London whale. One of the things that the London whale did that was kind of funny, actually, is that he had purchased large amounts of really obscure securities. So he was basically the only guy in that market. And everybody that was in that market could see that he was stuck in a position that was underwater, essentially. So it was like a well stuck in a tiny fish tank. And he was saying, is that happening in other markets? Is that happening in Bitcoin, etc., etc.? But I was like, no, because not nearly on that scale. Bitcoin is more like it's a teeny tiny fish tank, and there's just too many fish in it, right? But maybe that one wallet in SHIB, that would be a pretty big well. But my understanding is that there's a lot of wallets that are pretty big over there.
I have just only one question left.
Some people just really YOLO'd on it.
Today we have the ECB,
which is surprising because it really is like basically a scam coin as far as I can tell. Hey, NASDAQ trader.
And that will weigh on the euro. So then possible cheaper euro means imported inflation. What is that aspect highlighted during today's discussion among members? And maybe let me, to finish, express a wish that the next and last press conference of the year could be held in presence as a sign that ECB has a growing belief that the pandemic is near to be over. Thank you.
Well, thank you so much. What I hope is that maybe the first into 2022 will be with physical presence, because we are out of precaution. We have actually...
News Squawk tweets, Toomey launches effort to preserve commission-free trading. Gotta hand it to the senators. They really squeeze you for every edge they can get.
Just to be on the safe side and to make sure that we don't expose staff to, pandemic issues, risk of contagion, and we're taking every possible measures to prevent a recurrence of what we saw in the past. But certainly...
So, Amar, if you're still there, I think that this is... I don't know if this is a tool for me, per se, but it's certainly something that I know my audience is interested in. So I want to help you promote it some way. I'm not sure what the most effective way of doing that would be.
And your question in real life. On the issue of the spillover of any tightening measures that would be taken by either the Bank of England or the Fed, this is not a matter that we have discussed today at all.
Like playing it on my stream, probably not the best thing, because then everybody will just say, "Oh, I'll just listen to Seth's stream."
Francesco, please.
Thank you. Good afternoon. My first question is about asset purchases. In your opinion, is their duration or their volume more important in achieving the 2% target? Some governing council members seem to have expressed divergent views on this point. And secondly, on a different topic, what do you think about the European Commission's proposal on Basel III requirements for banks, postponing the start to 2025? The ECB had called for full and timely implementation of Basel III, but do you think it is useful to consider some European specificities, for example, on lending to non-financial corporations?
Anyone that is serious will go and trial it. I don't know.
Turning to your first question of the of what matters most in respect of asset purchases, we did not debate that at all.
I don't have the... Where is it? Hold on.
But this matter was raised in the past, and I think that you rightly characterized the diversity of views. I think the dominant view is probably that volumes matter more than duration, but I think the jury is out as to exactly what is the ultimate right outcome to that question. On your other point concerning the European Commission...
I have to go and find that link that you gave me for the seeing the number of clicks on the links, because last time I looked at it, I was like, oh, not as many people are clicking it. And of course, one thing is like, yeah, it's an affiliate link, so I make money if people click it and buy it. But I was more concerned about like, okay, a news squawk is really, really important to get. And so the more people that I am convincing to get a news squawk, the more useful, we're being. Well, if not very many people are clicking on the news squawk, then I sit down and I say, okay, people don't believe me that it's a really important thing to have.
I think it's
I need to do a better job.
Of implementation time, but also qualification of certain matters on the output floor, on various characteristics of the Basel III principles. So let's not rush to conclusion. And let's make sure that.
Well, the issue with the playing the sounds is really more on my side. Like the alerts that I have, I really pay attention to them.
It can be.
Thank you.
When I hear that click, I'm immediately, oh, okay, what happened? Okay, order pulled, they ticked up.
Good afternoon, Mrs. President.
I have some other alerts too, but they haven't played it in a while. The market has become so tame. I had these ones that would alert you when we skipped prices and stuff. But maybe just the visual? Well, let me open it. I don't have it open right now.
And how can you solve the problem? And the second very general question, is it really fair that countries like France or Germany have just as much only one vote in the council as Malta or Luxembourg? There are probably
I'm just turn the volume off
the
here.
weight of the votes to the gross domestic product, or for example for the size of the population. Thank you.
The main council little meters. So this is another problem that I have is like I'm running out of room, man. Like before it was like, oh, I could rearrange this and I have this chart down here that I don't really need. But then I added the micro treasury futures and now I don't have enough room. You see how I have all this stuff kind of stacked up here in the upper left corner?
When I was finance minister, subsequently when he became president of the Bundesbank, and I was head of the IMF. So we go back a long time, and we have a very good working relationship. As I have publicly said,
minimize the main console and have the pop-ups turn on. I think I turned those off. Let's see here.
I have enjoyed the relationship, including in the governing council.
You get these things, right?
And there is nothing in what he has told me, and nothing in what he has told colleagues on the governing council that would hint in the direction of what you have alluded to as the cause for his stepping down. I think he has referred to 10 years is a long time, and there is...
Have you calculated how many inflections there are on average in the US Open?
I think he has his own personal...
No, but we could do that.
He has also indicated, but I certainly would not regard them as fatigue with the way...
You say you can make them absolutely wildly small?
Under my leadership. And as I said, constant stepping down is a bit of an overstretch for somebody who has served for 10 years in his position. Now, weighted voting,
how small can you make them?
It's just not in the cards and not in the...
I can make it super tiny like that.
It was constructed over the course of time, and it is certainly not for the European...
Make them narrower.
To change that and to take a view
super
on that particular matter. What I can assure you, though, of is that each country, member state of the euro area, has a voice, is listened to, is respected, and certainly some members, which are larger than others, play a more critical role and are more active, including in the
I should come back in here and add...
determination. Thank you.
I only added 2 instruments, but let's go and add the...
Isabella Bufacchi of Il Sole 24 Ore. Isabella, for you, please.
The 10-year at least.
Good afternoon. Thank you for taking my question. President Lagarde, I have two questions. One, if I may go back to forward guidance, not on the three legs and
the moment it's not really
on the fact that the
moving very
Governing
much, but
Council still expects the key interest rates to
the
remain
sensitivity, the lower the sensitivity is, the more it should trigger, right?
And can you explain why on the forward guidance will still
So I set that to 1. There's just not that much activity in ES right now.
can we expect that to be going by
It's
steps?
probably doing that because of the, you know,
And my second question
it's
is
going to be
on
adjusted to like what the volume is during the regular session.
of the targeted longer-term refinancing operations will end, I think, before the next governing council.
I turned it completely, the volume completely off.
Or will there be a transition towards a different TLTRO? Thank you.
Well, thank you so much for your very pointed question in relation to forward.
So I wonder.
So I take it that I don't have to repeat my 3 criteria.
Let's see here.
Until
Settings.
The end of
Nope, that's not it.
Period, as well as
Do I have to change it on all of them?
On the underlying.
Back here.
They are as they are, and you
what's the chirp
understand them
sound
very
like?
well. Now, clearly, we have to continue being open to any eventuality, and I would say that it applies to present, higher or lower, depending on the circumstances. And this is a matter that is obviously for debate by the Governing Council, and that will be certainly reviewed over the course of time. On TLTRO, you are right, and I think that we should do everything possible in order to avoid cliff edge effect. And this is a matter that we will be discussing at our next monetary policy meeting, which, as you know, is planned for December, and at which
It doesn't look like at the moment that I can add my own though in there though, can I?
help us reassess and test.
Well, maybe I can find it.
We will also be looking at what happens.
Go do
in
hacker
March,
stuff.
And TLTRO and the way in which TLTRO phases out will be one of the topics that will be discussed at that time. Thank you.
And the next question goes to Luke Heighton of Market News International, MNI. Luke, over to you, please.
Good afternoon, President Lagarde.
Good afternoon.
As a couple of people have previously alluded to, markets are pricing in 20 basis points of rate hikes through the end of 2022. I wonder whether you're actually trying to signal the ECB's intentions to the wider economy rather than the financial markets. I wondered if that's the case. And
Resources,
not the case,
sounds.
why does the ECB spend so much time trying to sell its message to financial institutions that appear not to be listening?
Oh, yeah, that's interesting. Why? There's multiple files.
The second branch of your reasoning. Do you mind? Oops, I can't hear you anymore.
Sorry, I wonder whether, given that markets' estimations of where...
So what is the difference between each MP3 file?
2 years' time differ so much from the ECB's. Are you actually trying to signal your intentions to the wider economy rather than the financial markets? That was the first question. That's not the case. My second question, why spend so much time trying to sell your message to institutions that aren't listening?
I think the art of repetition and the determination of our conviction should eventually come through. Because you are quite...
You went on a field trip yesterday, that's funny.
Between their expectations and our analysis in relation to our forward guidance, which will determine when we move on next. And there is a disconnect between the two. So we have to ask ourselves where this disconnect lies in, and it's either a question of our forward guidance not being sufficiently clear so that it is understood, or it is a question of our inflation not being believed by markets, which is why, you will not be surprised, we spent a lot of time on dissecting our inflation analysis.
I see what's going on here.
The factors that are behind inflation outlook for this year, for next year, for 23, and trying to project ourselves into the medium term a bit further. And we are...
do you find Tick Strike useful? So, with the way that I trade, I think that
as
I don't know if it would add too much for me. But that's largely because I've just been doing it from watching the Dom for so long. You know what I mean?
By the way, if I need to spend more time doing it,
I do think that you can hear things a lot more accurately than you can see them actually. Like, especially when it comes to timing, you will react to a sound faster. So these audio files, they sound essentially the same, but the further down the list it goes, the more clicks are in the audio file. So it sounds like that it does come in and say like, okay, there was a ton of volume on this one, so play this audio file. And then you get this sort of a thing.
With the higher APP purchases. And my second question is in relation to inflation. What makes the ECB so certain that inflation will fall?
Which is kind of what I was trying to figure out, Amar, but I don't think you described it to me very well.
Bottlenecks in supply chains, or
See, look at my. Let me show you mine.
Between the fiscal stimulus, for example, between the eurozone and the US, for instance. Thank you.
Well, thank you.
You just have one file and it's floating. Yeah, I totally know why. Yeah.
I expect PEP to conclude and come to an end in March 22.
Well, let me.
Next is something
Why
that
isn't
we
it
will
not
be
letting me
debating
see this PC?
at our
Oh,
next,
it just takes a little
governing
bit.
council meeting in December. So more to come in that respect at the end of our meetings in December. On the inflation, what makes us confident that inflation will decline in 22 is what I have tried to explain. So, what is behind inflation at the moment? We have those base effects, including in particular German VAT, which will go out as of the 1st of January. So that's of the chart, and it's about 50 basis points. Second bucket is everything that is
when you look at my audio file,
and as a result of pandemic. And this is essentially that,
Did you hear that?
disconnect between supply and demand, which is causing these multiple shortages in equipment, in labor, in all sorts of services as well.
here it kind of sounds like two marbles clicking together, right?
In previous cases, let's remember.
So mine is 0.12 long,
that led to disruption
and this one,
supply chain, which was restored.
There's a little bit of lead into it that is longer than my file is.
Supply eventually adjust in the course of time, and we will see that. How long will it take?
Tick strike is great for overtrading. could cause you. Well, I mean, the DOM kind of tends to make you overtrade at first. I really had to get into, well, I need a reason to be taking a trade. I need a fundamental reason to be taking a trade rather than just I saw something. Otherwise, I want to take it all the time.
If we learn from previous similar, very sharp rise in the price of energy,
it's just to make things super efficient. Yeah, because if I come in here, oh, where is it? Where'd it go?
So for all these reasons, we believe that our analysis
I'll open a new one.
Now, clearly as well, the longer
new
bottlenecks,
market depth tape. Okay, so here it's on ZN, right?
We have to be to the wage
properties
and to the bargaining arrangements and
so if I, well, I'll have it 50. I'll leave it at 50.
A possibility of second round effect. But let me remind you that we are currently in a situation where we have slack, where you have nearly 2 million people.
So now you'll hear it going off quite a bit, right? Okay, so when a ton of volume comes through, you hear that or bit, right? That is the performance problem, because basically the deal is that you can come in and you can say, okay, in Ninja Trader code, you can come in and say, every time that I hear a sound, or every time that there's enough volume or that there's an update or whatever, make the sound, right? And there's like a buffer with it, so you can only call that method so fast. And if it's like you call it, like if you called it 1,000 times all at once, then it will just play them one after another, and that's when you get that bit. And so where Amar is saying is that there was times where, you know, there was a big chunk of volume or whatever, and so instead of trying to just play that sound 1,000 times, I just came in and said, play this sound instead, right? But that's where I'm saying, instead of having it click multiple times, change the pitch of it. Like, if you ever played Quake, right? When you use the machine gun, it goes tick 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 tick, and then when you use the railgun, it's like thunk, right? So basically, the size of the more volume there is, the deeper in tone it is, and that stands out to people. And that might be a different way to do it. Because what I want to hear, I mean, I think that this gets the job done. But what is interesting to me, and maybe it's just more of a technical problem than it is like that it would be useful to trading, but what would be interesting to me is to really try and duplicate the noise of the trading floor to get something that really sounds like noise. And when there's a lot of orders going off, you know, if two go off at the same time, then they kind of have that chorus effect where they kind of cancel each other out to some extent, right? So to do that, what you have to do is you have to tap into the audio buffer directly, essentially, and just tell it exactly what to be playing instead of relying on the framework or whatever it is to play the sound. Right. And to do that in C# is like, first of all, audio programming is difficult anyways. But then because NinjaTrader is like stuck on .NET 4.5 and everything, it's like you can't use any frameworks or anything. Okay. The ECB ended, by the way. Let's close all these. No. Close. No. Set it to 20 lots of sound gunshot. But see, to me, it doesn't really tell me anything, because I'm more interested in looking at the deltas and stuff. Like, you could learn to do it. Like, if it was doing it from the beginning, I think it would probably be worth it for me. I'm just gonna turn it off there for a second. So, oh, by the way, we should turn J on. We should turn on J there. 20 lots sound gunshot. You know, like I think if you really took it to its extreme, that you really would get something that practically sounded like white noise, but that you would be able to pick out things, right? Like think about an audiolization. You know, it's like a visualization, but it's audio, so we call it an audiolization. Imagine an audiolization that literally was using every piece of information in that market to do it. Right? You get what I mean? You would almost sound like white noise. Okay, well, the thing that I was worried about happening was I worried? But the thing, remember, I came in and I said, well, there's an auction today, so like this whole move could just reverse on us. And sure enough, like, we're right back to the open. So now what do we do? Do we go long here? I think we do, actually. I don't know about this exact spot, but yeah, it's not going to give me that. No way. No way. I'm not going to be that lucky. The ZB is just up on the highs. The E-minis seems to be happy at the moment. That was a pretty, oh, and then why didn't I, oh, okay, here we go. It's a pretty decent move so far. Almost 10 points. Almost. Do we go along here? Question mark. Make it a poll question. We could be hula hooping. Tungsten cubes. I want a tungsten cube. Oh man, do you see that? I did not get filled. I was 15 traded, but they didn't fill me, and then boom. That sucks. I almost just missed the entry. Well, I don't think that it would be wise for me to try and chase that right there. We could try and chase it, but no, probably don't want to do that. Let's go to 13 now. I think that could happen. Maybe I should be putting them in the, oh, you know what? It doesn't even matter because I put it on the wrong account. That wasn't even a live order. Yeah, they came back hard there, didn't they, in the 30 year? I think I need to back off. Wait, you can get tungsten cubes as low as $19? Is this order flow? Yeah, what you see on your screen, we're trying to trade order flow. I'm not fast enough today. I can't seem to keep up. Well, it's not that I can't seem to keep up. I wanted one at 1.541, and then they went down. I guess if I was trying to get 1.531, that I wouldn't have gotten filled, but so maybe I would have gotten some good excursion, but then would be like, it'd be coming back, and yeah, I don't know. But I really don't like the way that ran out in the ZB. That was a little much. Problem is I didn't see a spot where they might come back to it as a magnet. I'm kind of have to just watch it here for a bit. Oh, it didn't go to site. Okay. Tungsten cube. Oh, so it depends on how big you want it. If you want it to be 4 inches, then it's $3,000. But if you want a 1 centimeter cube, then it's only $20. How big of a tungsten cube do I want? 4 inches is big. That's funny. Oh, it's kind of the funny thing because it's, when you increase the length of one side, it's an exponential increase on it's cubing it, the volume of it, right? So a 4-inch cube is a lot more volume than a 1-inch cube. Oh, now it wants to chat. They're going to try and convince me to buy it. I better leave. Okay, they're coming back. They're coming back. You wait long. What's your plan? Well, I kind of feel like that I missed that. I think the opportunity in ES was buy on the open. I think I may have missed the opportunity over there. So I'm kind of watching the Treasury. Maybe I'm stalking along. We'll see. You're the very first person I know who ever said they wanted a tungsten cube. My mission in life now is for you to have one. Oh my God. No, there we go. We could set up a PO box if you guys want. That's funny that you haven't heard. Tungsten cubes is totally a thing because you realize what the significance of a tungsten cube is, right? Tungsten is the heaviest element. So this little 4-inch cube is like ridiculously heavy. It's like a 4-inch cube is like I think 20 pounds or something like that. It's heavy. You got 4560. Yeah, so see, that was the trade that Ace took is probably the one that I needed to take. That's coming back hard. 29. If you would stop messing around with sounds. Well, it wasn't just that. It was the ECB, right? It was like, okay, we wait until the ECB comes in, and I just took too long to get like in the mode after it ended. I'm glad that I missed it in the Treasury, though. That's a little bit too messy. Like I'm looking at this, maybe that. Well, that's, see, that's bad excursion. And eating into 28 even. That one, though, held, right? That one might have been a better trade if they get filled at 28.5. Yeah. But now it goes down to 27.5. Okay. Now are we getting some currency? No. I guess yes, and the 6J is coming along. Gold seems to be running along with it. So reset it right there. They're being a little I don't know if this is a good spot. I don't think you're gonna get filled. Can you test 27 now? I guess. Right. Okay. You can see the market maker moving it, right? These are the ones they just took. Here, the market maker's more willing to take fills. The offers seem awfully flighty, but they're not. Volume's not hitting it. Oh, only 254 to get that to tick up at 27.5. Oi. I mean, that's good for us, but this is not necessarily the kind of action that you want to be in, is it? Okay, that's a little better. Seeing some steepening coming in. Okay. If we were so lucky. Let's see here. Wall Street Journal. Robinhood's revenue has been dented by a pullback in cryptocurrency trading, raising questions about the trading app's staying power. It also makes you wonder how Bitcoin is back up at all-time highs if there's not as much trading on it. Oh, I know why. It's because they don't have Shiba Inu on the app yet. I tell you what, if it happens, that Shiba is just gonna like go sky high, and when that happens, you sell that thing with like your life dependent on it. If you're long, you sell that news, man. Because what's gonna happen to all the Robinhood users gonna come in and buy it? You sell into them because that's gonna be the top. Then the bag holders. It might only be like by a tick or two, but like you notice this one, we were at 27, we're 3 ticks up, but this moved almost 10 ticks down here, right? You got 10 points. Good job, Ace. It was a good entry. By the way, what did you make yesterday? I already asked that, didn't I? So because yesterday sucked. Yesterday was the rangy day. So like yesterday is like you got your 2 ticks and we're done. Then that's great. If you got more than that, then I'm like, how did you do that? Okay. Oh, you didn't trade at all. Oh, okay, I gotcha. So you did answer it. Gotcha. So why is it that on the days when it's like it would be the worst for him, he is magically not there? How do you do that? Ace claims that there's no God, but I'm pretty sure that he's praying to a God and he's just trying to keep it all to himself. That must be what it is. My buddy from the CME lets me know. So he told you, yeah, you should just go and take the field trip that day. Nothing's gonna happen. Well, I don't like that excursion one bit. Can you believe that Shiba has beaten out Dogecoin? I tell you though, that's probably your best example yet that orders have impact, right? All retail traders buying it makes a big difference. Shitcoin's gonna shitcoin. Oh yeah. When the cryptocurrency market crashes, Shiba's gonna get hit the hardest for sure. If it doesn't get destroyed before then, which is very possible. So I mean, there are some really big whales there in Shiba that if they tried to take their profits, it would just completely wipe out the whole run, right? Depending on how they execute it, of course. Like if you were a whale, you would have to be starting to execute your meta order now. Like you have to be taking some profits now, providing some liquidity on the way up. Ouch. Okay. So, well, we got a little bit of a good run, but it was 8 in favor, 8 against, and I bailed. Probably it might turn around there. There's some volume and stuff trading. Obviously, there are UFOs. I mean, the belief that they're from another planet. There's something weird going on out there. No. UFOs is probably the only explanation that I think makes sense, but we don't know enough. So with it moving this way, can I really take a trade now? And that drop to 25 in the 10-year was not good. Now I'm kind of like, well, maybe we do need to buy. Maybe it's a rising rate state, but I don't know. I mean, the volume, well, I don't know. It's a tough call. Have you noticed how everyone is a trader nowadays? I don't know about that. I see a lot of people that think they know about the markets, but they don't actually know shit. You know what I mean? Like they know that Shiba Inu is going up and they spam everybody about it, but they don't actually know anything about markets, you know? But I think what you're hinting at is that we're seeing signs of excess that would be indicative of a top. I agree. Well, there's a little bit of upside again, but the liquidity is still pulling out of the way. You have friends that were into trading, now they're yeah, like that's the thing that I think is crazy, is that everybody would always give you crap for trading stocks and Forex, and they're all in crypto. And I'm telling you, man, it's fraud is what it is. The reason that the cryptocurrency market is doing what it's doing is because of fraud. And Tether is it's going to go down. Do you see the market was moving away from tethers? Although USDC is kind of playing some of the same games. I mean, they're making money, so I can't even say anything. Yeah, but you just remember the majority of traders lose money. Have they sold? Did they sell and it's all in the bank? They haven't made shit, right? Haven't actually made money until you sell. Yep, it's all on paper. Which kind of makes you go like, what? Like, how can you be up 1,000% and then lose it all? Like, all those guys, they've made money. There's no way that they lose money. But when it goes down awfully fast. Yeah, so right back down there in the Treasury, pressuring 25 again. So I keep thinking, oh, well, I want to take a trade. I think my mind is still saying, like, yeah, if you catch one, you could make some good money on these moves, though. But it seems a little bit too fraught. Like, so far, it's kind of been doing what I would expect it to do. But now we're at this point. I want to buy the Treasury, but it would not take much volume for it to go the other way. So it's kind of, I don't know if I really have a really good spot, you know. A friend of mine has been martingaling for Bitcoin for 3 years now. Oh. Losing a few $100 wouldn't make me mad as much as being a millionaire on paper and not being able to liquidate, right? Well, like here's the problem, especially with a coin like Shiba Inu, is that the people that are trading this don't know that, right? They don't understand the outsized impact of orders. And so they don't realize that when it comes time to liquidate, that it's going to have a really drastic impact on the price. Like there are guys out there with wallets big enough that they want to take any kinds of profits. It's going to make things come back, and because it's so much of a bubble, you know, like that starts even just a little bit, and it will just flip back on its head so hard. And you could get this sort of a thing where it pumps again. You know, like it'll drop 50-80% and then it'll pump again because like it's not over, like it's still not listed on Robinhood or whatever, you know. Yeah. The interest rates are being really sensitive to the price changes here for some reason. How is garlic doing? Well, it came back a lot from earlier in the year. It's still kind of look like it's basing out here. I'm gonna go and look at it. See, the yields are doing a lot better in terms of volume. Well, the 10-year is for sure, but you can see there more people doing some spreads off of this latest move for sure. Garlic coin. So as of late, it hasn't been. It'll seem like it's starting to make a run, and then it just sputters out really quickly. They're just having a really, I mean, the thing is especially with like Shiba, for instance, it's like it sucks all the air out of the room. You know what I mean? Having trouble. CoinMarketCap is having issues. I love how often Jigsaw Bridge crashes and resets. I've never had the bridge itself crash, but NinjaTrader 8 still has issues every once in a while. So do you see here in Garlic Coin? You get this rise like this because it's like one big fish came in and bought, and then their impact is over, and so it's just like there's nobody follows up. Nobody follows up. So you can come back to the past year, right? It was all the way up at what? 32 cents at one point? 32 cents, it was a sizable amount of money for me. 30 cents, I was like getting nervous. But now it's kind of come back. Granted, it's still holding like the, as long as we're above 1 cent. If it starts dropping below 1 cent, then I'm going to be like, what the? Because I still think Garlic Coin is undervalued, relatively speaking. I mean, for as how you can value a cryptocurrency. I've literally never had any problems that I've ever had with Jigsaw. I think were more due to my computer and my data feed. Like I think your data feed is going to fail on you before Jigsaw does. NinjaTrader can handle it too. It's just like every once in a while, I'll try and messing with a workspace or doing something like that, and NinjaTrader will crash. Well, they felt that way too easily. Cheap antidepressant reduces the risk of hospitalization in COVID-19 outpatients who are at higher risk of severe disease, a large study has found, tweets the Financial Times. Interesting. Okay. The 5-year is trying to push up, but like the 30 is just, the 10 is just like, eh. Still a little too slippery for my tastes. Looks like somebody just has some to sell here today. What? Yeah, look at that. Clicky click. Bids pulling. Oh, that was a terrible trade. I think I am off my rocker here. Like, that was just terrible. Look at the 5-year drag it. Ah. Mm-hmm. I'm keeping my hand back here. That's Is it? Well, 6J does look like it's going a little higher. It's still kind of going through that range, so. Dude, I saw a TikTok the other day about a guy that he does astrology on TikTok, and he was in a trade and he thought all of the markets are random, but then he saw his astrological signs and got out. Look at that. Look at that. Well, that is just... time to buy? Maybe. I don't know. Wait, what is the delta doing? The delta is declining still. Delta is declining still. Well, when was that move? At 7:30? It's about time. It's about time. Well, there's 24.5. Okay. Uzi says, oof. Yeah, they're dropping out of the bottom of that now. I mean, they kind of broke out the top too. So was that like a false breakout and this is done, or are they going to swing back into that area again? Right? There's just, the liquidity is just too slippery in the 10-year today. I'm really quite astounded by it that it's still doing this. Oh, but are people saying the whack is moving? Let's go take a look. If I can find the application. I forgot that Trump was speaking today and we'll probably try and pump it. E-mini coming down. It's taking a while for it to load for some reason. There we go. I was like, okay, I'm gonna minimize this. I'm done waiting for it. Okay, so the whack is up 7-1, but not by much. And I can see that my funds have cleared. Cool. Well, I'm just gonna I'm just gonna stand by on that one. Really? So you can see that the market makers in the micro treasury are, well, let's get it. That is a little bit further than is justified by what this just did, just by a little bit. But like, who's going to try and take that fill, right? Man, and that sucks because I had, what was that last trade that I took was a long at 1.65. Okay. Well, it'd be up now, but it was a bad entry. Taking money for pretending to know something you don't anymore. Well, if you were taking money for astrology stuff, I don't know. I kind of feel like people know that it's just for entertainment, right? People know that that's just for entertainment. I don't know. There's a line there, right? This is like the time that I would expect another meta order to come in. I don't know. Look at that. I thought about it. Can I take 71? I suspect that we're just gonna pull back up into the hole at 26. Maybe that skyrockets back up through it, but I don't really know. I do see some changes in the order flow though. And what about the spread? Spread still seems like it's on the steepen. It was worth a try. Let's see, maybe I can make this order work anyways. Come on, come on. Big click. Nope, didn't go. There are not very many market makers in the 10-year here today. It's like going down to like 500 almost every time. There's a big MBO in TN. Okay. And I have TN up, so it's kind of... Iceberg 24 half. Finally. Looks like Jay did take a trade. Okay, back up to the higher end of the hole after the iceberg. Corn's still popping. Oh, really? Let's see. What are they doing today? 1.79. Yeah, that's another good another day. Good. Okay. So another iceberg at 26. Not anymore. That bid comes back awfully quick. That might be a correlation. Are we seeing? No, not really seeing anything too unusual. So ticking into 27, that's good, but it's there's still that hole. Like I'm going to say 25 to 26, there's that hole. So even if you get like 27, like I'm really going to have to be like 29 before I'm like, it's like a true breakout and I'm for sure it's running, I'm wondering if in the 10-year here, when it's moving more than I expect, if that is because of the market makers in the micro yields, or if it is that the interest rates are being more sensitive. You get what I mean? Hey, good morning, Bob. Because the interest rates and price don't track each other 100%. The the dollar value of a basis point changes from time to time. So you getting this thing at 26 again where they just go back and forth a ton? ZB is not cooperating. Oh, there's a lot of trade happening there at 26, that's for sure. Now they're doing it at 26.5. That time the 30-year ticked up, though. We're going to make 26 point of control here. 3K more to go. Oh, 5-year really pushing that time. I mean, if you're executing a large meta order in the 5-year there, you're probably okay with what's going on right now. So once again, like tons of volume going through, spreads increasing, but it just kind of falls. That's like the market maker gives up. Lots of curious flow throughout all of this, though. So I wonder why is the 30 so anxious to get to increase rates? I wonder. Oh yeah, we got crude here in a second. That's a good point, Lucas. Or the natural gas stocks change, you mean? You know, we have New York Fed Treasury purchases here in a second too. Hmm. Jay's doing pretty good today. He got a good trade. But my micro's not cooperating. Not cooperating. Yeah, so I'm not seeing it pop through here, but the New York Fed Treasury purchases 0 to 2.25 years. Expected 12.425 billion. Haven't seen anything come through yet. We do got Kansas Fed manufacturing at the top of the hour. Oh, that's an unusual time, isn't it? So did I get screwed over again? Yes, it did. It's like I got out at one spot 5.7 and then it come right back. It's kind of an odd pause in the order flow there. I wonder if that was my data feed doing something weird. When I start to look at the cumulative delta, it's starting to go a lot more sideways. So I'm kind of wondering if this is really is just turned into market making action that is just kind of frustrating me. You know what I mean? S&P 500's looking pretty good at the moment. See, it happened in there again where they just can't seem to hold it.
So according to a Hill reporter on Twitter, Progressive Democratic Representative Talib says that she is a no on the infrastructure until there is a deal on both packages to pass together.
I may just be done for the day, I think, guys. So it seems like it should continue to do something. But I think they did their orders. There was like both ways. They're happy, and now it's just kind of stuck in this area for now. We might get a little bit. I took a couple of losers on the micros. We will still get positive action going into the auction, but we'll see. My robot did take a long in the E-mini that looks just absolutely amazing. Yeah. I mean, I really wish that I had, well, not wish, but it really sucks when you got the ECB talking and all of the movement happens during the ECB, right? Because after that, well, I mean, it's kind of been down after that, but it's been awfully choppy and slippery. That's why I'm like, it really makes me want to get in for some reason, but clearly it's not the best action for it, right? Like, I've gotten some favorable excursion and everything. Actually, every single one of these has had some decent favorable excursion, but then we'll just go just as much the other way. So, and it does appear that at least for the moment, I'm on the wrong end of it. Like, I've been trying to buy it when they've been moving down. Bid in most today with lackluster economic data. Did I miss something else? I didn't feel like that the economic, well, okay, the GDP wasn't very good, was it? There's an auction. There's a 7-year auction, which is important. Looks like a buy there. That one's way more encouraging. Yeah. I missed it. Now you're at the top of the range. So the buying it, we're doing it right here. You'd have to be looking for a pop out of the range. Could do it though. There was some momentum behind it. We're outside of the reversal time period, so there's that. 26 half pole. Okay. The 5-year, look at the 5-year. Like, we almost have a situation where the 5-year is almost at its high and the 30-year is almost at its low. So we're getting like a really strong steepener, which is probably a large
commercial insurance market says
factor
questions
behind
remain
why
whether
it's so
pricing and
frustrating in the
reserving can
10-year.
keep pace in an extended inflationary period.
Let's reset. Notice the topics discussed in your own become a topic on another good trading site the next day. Oh, really? Which one? Who's stealing all my content? That 5-year looks like it's gonna bust the highs, man. This is gonna get interesting. Well, if it does that, is the 30-year gonna get like swing back up? What is more good for you to watch, the level 2 or the chart? If you had only one choice, I would do the level 2 100%. Well, I mean, if I was only showing me level 2 and it wasn't showing me volume, then that wouldn't be very useful. But a chart of price is not really very useful either.
On the vote today.
Right. You have to see the orders. You have to see the orders. Remember, price is just a result of the orders, and it's a very, very noisy result of the orders because of liquidity conditions and so forth. So to really understand what's going on, you have to see the orders. And 30-year, that 5-year is creeping up there. Another tick. Okay. Now I guess it didn't hold. The high of the day is going off her.
US House Speaker Pelosi, noting Biden asked for infrastructure vote on Thursday, says we must succeed today. It's coming from a source familiar with Biden House Democrats meeting.
Now another thing that I would say is that you can view the orders from a chart. I just don't think it is as effective of a way of doing it. So, you'd have to have a volumetric chart of some sort and some level 2, like you could use my level 2 indicators on your chart and stuff, but is just not as efficient as being able to throw up, 12 DOMs on your screen and whatnot. No, they're eating in at 27.5 pretty easily now after finally ticking up. And there's a new high for the 5-year. Or no, actually, it's not a new high. 26.75 was the high, right? Yeah. 27 will be a new high. Some profit taking there.
Biden told the House meeting not to hyperbole that congressional majorities and his presidency
The 30-year was with
by
it
what
tick for
happens here
tick.
next week.
If not, the spread flattening back out a little bit. Okay, they did trade 27. They didn't clear 27, but they're trading into it now. Oh, stop run right there in the 5-year. Woo. There's probably more where that came from because it went, but there wasn't actually that many orders. I know. I suppose that like 1,400 in the 5-year is a decent amount, but interestingly enough, though, I would have thought that if any one of them was seeing like excessive buying, it would be the 10. I guess we are up 10,000 since that low, but that's not that extreme, right? But the 5 is where we're seeing crazy things. And it looks like they backed off a little bit, but the steepening is continuing through here now as the 5-year pushes new highs. Pace of interest rate increases in the 10 years slowed a little bit. E-mini may have just had a pop off top there. Jay got out. How much did he end up making on that? 600. Not bad. Okay. So now I'm kind of starting to get hints of stop runs in the 10-year too. I have to reset.
In 10 minutes' time, we do have the Kansas Fed Composite Index, forecast 20, previous 22. We also have the Kansas Fed Manufacturing, previous 10.
Kansas Manufacturing Index at the top of the hour. I will stop here in 5 minutes, but just know that's out there. The manufacturing news has been fairly significant as of late, so. Oof. Some profit taking there. Fallen back into a little bit of a liquidity hole left behind by them. Yeah. Well, it still seems slippery in the 10-year, doesn't it? I mean, that was a pretty good move up. There's a pretty good amount of volume on it and everything, but then, like, they formed the liquidity hole behind them and they fell back into it after some stops going up into, like, the open and into new highs in the 5-year. Now, note that we're still, like, I mean, the breakout was at 2027 essentially in the 5-year, right? So the 5-year really shot up there. Hence the hole. So if we're looking for where the hole is, it's, you know, all the way to this. And did we flatten a little bit? Just a tad. Is it I'm quiet or are you guys quiet today? What do you think? I've been quiet today. Well, maybe a little bit more there. Oh, that was financial. I was like, where?
It's
What
11
was
a.m.
that
Eastern
sound?
time. We do have the Kansas Fed Composite Index
Okay.
forecast 20.
It's time for me to get going.
Fed manufacturing, previous 10.
ECB press conference today. Slippery treasuries. Slippery treasury action ahead of 7-year auction. Okay, guys. Well, interesting day today. Not my best. We'll see how this works out. I will see. Not much to say, so I will see you guys tomorrow, Friday. And in the meantime, stay profitable, friends.